Hey guys, Mike here. So I got a loaded video for you. We're going to go over three main things. One is how the market's playing hot potato. You may remember that game as a kid. I'll address that. Two is when you're looking at, these dips we're having or why we're not having major corrections and all this fun stuff. I'll show you a chart. You can track it yourself. It's free to track, and it will definitely help you out to see what's coming beforehand, what's happening, and then like, do I need to be buying this dip or not? Right, and so I'll show you that, and it has something to do with smart money, which is the bond market. And then I'll show you the difference between, you wonder why one stock in NVIDIA is going up, and then there's one stock in Tesla, which kind of stuck right now, which reports earnings tomorrow. And I'll show you like the exposure of the options market, right, and why that is. So when you look at this really quickly here, we'll go through this. This was something one of the members was talking about, so I decided to put it out to you guys as well. What the heck? And this is the Bank of America U.S. Bond Market Options Volatility Estimate Index. It's a mouthful called MOVE. I've showed you this before. And so what I decided to do was throw the SPY on here, the MOVE Index, and then your credit spreads, right? And when you look at this, you might notice, we'll go through this slowly right here, the market's still grinding higher. It's kind of sideways now, but what do you see? The volatility in the bond market is picking up, but the spreads are not picking up. They're actually tightening. I showed you guys this the other day, or maybe it was last week, right? They keep pushing down. Well, here you got a decent pullback. Anywhere from like these pullbacks are anywhere from 3 to 10%, right? Most of them are 3 to 7. And you can see what happened. The volatility and the spreads went up at the same time. What happened here? Same thing. Volatility and the spreads went up, okay? And so that they have to really move in unison. You can't have just volatility coming up and the market's going to go, oh my goodness, what's happened? Right now, it's like the market's waiting like, hey, is the spreads about to come back up right here? You can see the same thing here, right? Market comes down. What happens? The spreads and the move index are moving up. So you got volatility and the spreads increasing. And again, that trend line you see coming down is on the spreads. Once it breaks above that, we're definitely going for a crash in the market. Just FYI, I'll show you what I'm talking about. Now here, what do you see? I'll zoom in. The market's going up, sideways to up. What happened though? The volatility went up, but the spreads did not. Okay, so that's the big difference now. Are the spreads going to pop up or not? And when you look, this is a weekly chart. This was 2022 when we crashed. What do you see? Right here in this big box. The volatility is crazy in the bond market. The spreads are blowing out. Oh my God, the market's going down. Remember, the market only goes up if the bond market is okay. If something's going on in the bond market, that's where we raise all our capital at and stuff. Then the market is going down, okay? And of course, why does the market continue to go up since 2022, October-ish there is? Because you can see volatility spiked up, but what's the spreads done? Either going sideways to down. We've had small pullbacks, but you're not seeing these major increases, right? The spreads aren't, like they say, aren't blowing out and all this fun stuff. And you'll see all these trend lines I've showed you before on the spreads, and as long as we're not crossing that, we're good. We keep rejecting, coming down, getting tighter and tighter. But again, you see right here, we shut down the world. What was going on? The bond market was good. The Fed stepped in, started buying everything that moved, including bonds, public debt, you name it, and the spreads went down when the world was shut down, which is an amazing thing to do. And Paul Tudor Jones did an interview today which sums up what happens when the bond market goes to heck in a handbasket.
Well, it's so funny because financial crises percolate for years, but they blow up in weeks. That's kind of the history of them, right?
And he did a great interview today. I may put him in some of the videos this week. I may just put him in the members video, but he had a lot to say. But that's how it works, right? Everything's good until it's not. And then you saw a little smidge of that in July, right? You saw a yield spike, move spike, market went, oh my God, we're going into a recession. Like it happens really quickly, okay? And that's how it's going to happen again. It's how it always happens, right? And so, but you can look at that and kind of go, okay, if you got the right chart on there, you say, oh, do we break that trend line? Nope, getting rejected again on the spreads. Okay, we're still okay, but we're definitely in those low areas where normally you go sideways in normal times, and then you'll get a problem with the bond market, okay? So that's in this stuff you can track for free. If you got TradingView, you just track it for free, right? And you can see that for yourself, but I always wanted to show it to you because again, it's something I think it's reasonable to know, right? I never tracked the bond market for 2020, and now all of a sudden I know a lot more about the bond market than I've ever known, and how the bond market works and who's propping up the bond market and stuff like that. So I don't know, it's kind of the videos I enjoy doing for you guys. But the next thing here is obviously what's the market doing? It's playing hot potato with the Mag 7, okay? And what do we mean by that? Last week it was Apple, right? NVIDIA is their own little thing, but now it's what? Microsoft, okay? Even when the market was red, all the Mag 7 went red, even NVIDIA. There was Microsoft up over 2%. Remember, one of the largest weighted stocks in the S&P and Qs, and you can see it hit that 0.79 fib, bounced right back off that golden pocket. Boom, big day up right there. Bullish MACD cross, RSI is above 50 on the daily right there. Where can it go? You know, you're looking at 442 for your first target. If this continues to push up and they continue to hold that hot potato, like Apple did, hitting all-time new highs last week, and people go, what the world that happened for? Well, it just happened. Okay, we'll move this up to that all-time high, just in case it's going to continue going on until they pass the hot potato off. And when you look at it, I mean, we all know Microsoft, their earnings, way more growth, right? They just don't buy as much when it comes back to, you know, the shares and stuff. But when if that MACD gets pushed above that zero line, that's when you're really going to see a really good move. Okay, the bullish MACD cross is good, but it's below the zero line right now. Now, who's next to get the hot potato? Could be Amazon, right? They're at that POC shelf right there. You can see it. Again, that's all-time highs right there. Not much resistance above. They do have earnings coming up next week. It's going to be on Thursday, if I'm not mistaken. Or, hey, does Google get past the hot potato? Or does everybody get a hot potato in the Mag 7? That's a big one, right? Because Tesla's reporting tomorrow, too. Now, so when you look at this one, we talked about this one. Again, sitting there on support right there. All-time highs are to the left up there. Going into a volume pocket right there if it decides to carry out. Now, this might wait for earnings. I talked about you need to get above like 169, I believe it is right there. If you can get above that, then you can have a nice explosive move up, okay? But we just hadn't got there. It's just hanging out. It hadn't got its chance at the hot potato, all right? Neither is Amazon. They're just kind of teasing us, right? And they report earnings as well next week. I believe it is on Tuesday. And so we'll see if one of these is going to get the hot potato or just get the flamethrower and get a baked potato and go down. But again, we'll see, because Tesla might get the hot potato tomorrow too. Okay, again, they report earnings. We'll see what happens. Hopefully they do better than some of these companies reporting earnings right now. Now, last thing here I'm going to talk about, again, when we put this in the Monday's news brief, and I'll start putting this in here more for you guys because you guys asked it, so I'll do it. It's the weekly options ranges, right? Used to do this a long time ago, nobody talked about it, so I got rid of it. But this box right here, this is the weekly options move, right? So they're expecting anywhere from 577.50 to 591.83, as you can see. And of course, we fell out of that channel. We retested the channel again. So we got plenty of room to the upside, right? Not too much room to the downside. And this is what the options market expects, okay? So it usually ends up in here between 67 and 70% of the time is where we end up in this little move here. So if you see a big move down and we fall out of the range, sometimes you'll get a pull back up, as we'll see on IWM right here. But right now, this is where we're at in the S&P. We talked about we're just going to range right here, and that might be what we do the rest of the week. It could absolutely, maybe they're just setting us up for the week before the election, which you usually get a move. I'm working on a members video on that right now to show the last at least like 5 elections to see what happens. But again, we'll put this daily fair value gap out there. If we break that blue line right there, which we talked about for several days now, most likely going to hit that fair value gap, should get a response back up, unless it's something crazy going on in the market that we're just unaware of. But when you look at the weekly, I mean, good Lord, look at this. I mean, 1, 2, 3, 4, 5, 6 green weeks in a row, and we're basically flat. We're kind of red, but we're almost back to even, right? And then even if you pull up here, I mean, what is that, like 10, 11 weeks? So out of 11 weeks, you had 1 red week. It was a nice big red week, but 1 red week, okay? And so that's bullish. On the weekly, that is still an uptrend. That's just the way it is, okay? You still got that trend line above us, all that fun stuff, so just keep that in mind. Again, when we go over here to Qs, I got the range in here. I expand this range. Remember I had the box because we were ranging, so I adjusted this to the weekly options range. It's not much different, but the top is what? The top at 502.54 is all-time highs, okay? So that was the options market expected. Maybe we get a run up there. That's what they priced in here, okay? So you can see it right there from 480, 552, it looks like right there, to 502.54. And so we're still in that range. Again, we were red today. Every dip continues to get bought up. I say it every day. Every time we go down, they continue to buy and run this puppy up, okay? So the bears cannot push this thing down. We are in a sideways range. The market's just waiting right now, trying to decide what they want to do before the big move. And so we're still there for the weekly. Again, if we break down from this box right here, and we break 484.63, then obviously that trend line, and again, that gap will come into play, okay? It may not come this week, maybe next week, okay? Now, you see here on IWM, this is the box right there. It fell out of the weekly expected range, sucked back up into the box. This is sometimes what you see. They get out of these weekly ranges, all of a sudden, magically, they'll come back into the box. And you can see what they were expecting was actually to go pretty high this week. We've gone nothing but south because, one, crypto had another red day. So did IWM had another red day. It continues to follow it, okay? So if you see crypto start running up, good chance you see IWM start to pull back up. And now that we're at the bottom of the range, I'm hoping we hit this trend line, come into this fair value gap right here, get a bounce right there. It'd be nice. Again, that's around, I think, the golden pocket of the 0.79 fib I put on here the other day for you. That'd be a great bounce. Might not get it. Might not get it. We might end up just sucking up and being done with it from here. But we got a long way to go up versus coming down on this thing. And so don't be surprised if magically that happens. May not happen. Again, it's only 67 to 70% of the time. Now, you want to see the difference between NVIDIA and Tesla? Because the option market drives both these stocks. This is like the gamma exposure, okay, where the deals are exposed and stuff like that, with the biggest levels and stuff. You don't see hardly any red, right, on NVIDIA. I really don't see any. Tesla, look at that. That's how it's supposed to look. That's a normal looking gamma exposure chart, all right? But look at Netflix, or look at NVIDIA, excuse me. I mean, and they continue to grind it. Every day is this new all-time high, and they'll sell it back down and grind it back up, and all-time high. And it's just amazing to see that, and that's why you don't see Tesla getting any love right now, okay? Now, can Tesla get some love tomorrow? Absolutely. They normally hit their expected move about 75% of the time. And I think they're expecting an 8% move, if I'm not mistaken. And so you see tomorrow Boeing, AT&T, Coca-Cola, and then there's Tesla after the bell, okay? So it's going to be a big move in either direction. And then, of course, Services Now has had a good one as far as a big move and stuff. And then Sands, which is the gambling, casinos and stuff. And then you won't have too much data. You'll have existing home sales, crude oil inventories. But Thursday, as you see, is the big day. So brace yourself for that day. It's going to be an extremely volatile morning. As soon as that data hits, again, the market will use it to move it where it wants to move the market. That's just the way it's going to be, okay? So anyway, hope you got some out of it. Let me know what you think about those charts and stuff. Please hit the like and subscribe button on your way out. Feel free to sign up for the membership. Less than McDonald's combo, 2 private members videos every week, the Discord, and your morning news brief with a whole boatload of stuff. Again, $7.99 a month. So feel free to do that, and I'll see you guys tomorrow.